Welcome, team. Good morning. Welcome back to our 8 a.m. SPX Daily Plan. Welcome back, Doc.
Thank you. Good morning, everyone.
Before we start, as always, let me run our disclaimer for a few seconds, and then we're going to go straight into the chart, and we're going to look at the data for today. We had some really interesting earnings last night, and then obviously more earnings for today. So just 1 second. All right. I'll pass it back to you, Doc.
Okay, 1 second. I gotta get the right screen up here. I made the mistake of touching something.
No worries.
Yeah, share screen.
So why we do that, guys? If you join our YouTube channel, yesterday we had some really interesting live sessions. We had our 6 a.m. morning club. We showed the new indicator. We had our macro event, and we also had a really interesting advanced option strategies with Dan, where we talked about spreads, we talked about earnings, and so if you guys missed it, you can find it right here. And then on Thursday, we're going to talk about quant trading strategies with one of my good friend Nick from Miami. So we're going to talk about some of the advanced quant strategies that hedge funds are using. So don't miss that. And of course, we're going to be back with Doc and Patrick tomorrow and Thursday. Let me know if I can share your screen, Doc.
Yeah.
That's
okay.
Great.
So anyway, good morning, everyone. Let's do it. Take two. So let's do a quick review of yesterday. Some of you may have PTSD from yesterday, but to relive yesterday, I put this in my daily note. You can follow me on Twitter if you want to find it, and we'll put that link in there later. So we had the Friday Trump announcement that he's gonna do tariffs. So the market sold off on Friday. Then Saturday, he did what he said he was going to do. We had the tariff tantrum, and we pulled all the way back down in the where is it? We pulled all the way back down in the overnight session, all the way down to 5,900-ish, almost SPX equivalent, which is a round number, a lot of OI there, no coincidence, because market makers, even if in the overnight session, have to somewhat hedge off their risk, and the liquidity is thin. And so that's why you get some of these crazy moves overnight. Long story short, yesterday at around whatever time it was, 10:30 or whatever, news started coming in that that he was talking to Mexico and that things were going to be okay, or that there's going to be some kind of deal. And we kind of recovered, and then that started, was yesterday. Then we got this kind of gap up sort of thing. So we pulled back yesterday to 59.25, which I referenced in my note here. Let's kind of keep that as a mental frame of reference pivot for today. We kind of gapped up here like a newsy gap. First, we went to beyond 50, the round number 60, and then the 75.80 number was kind of the gap up, and then we kind of overshot 6,000, went to all the way up to like 60.20-ish almost, pulled back. PLTR had a strong earnings reaction, so the tech bulls got emboldened. Up we went in the aftermarket session. Then I don't know, I wasn't watching the aftermarket session, but whatever happened. Reality set in, maybe, or whatever it was. China retaliation, all that news, and I think the China news came out, and we kind of pulled back overnight. around midnight, back down to the 5960-ish level where we kind of broke out from before, and here we are kind of chopping more or less flat. Okay, so now let's look at the setup for today. So first thing before we even get to the setup, so the expected move, I have it in my little game plan there, is roughly 45 points. So the expected move, 45 points, and that was earlier, so it's probably less now, would kind of put us up near these max min levels. And so that kind of defines the likely range of the day. So if you're an iron condor seller like I am, you know, those would be areas where where I would even begin to look for safety and then maybe bring it in, depending how aggressive you want to be. So I like to, we have Jolt today at 10 o'clock, job openings. And so we know that that labor related stuff can move the markets. So that's a little asterisk. So let's get on to what I'm expecting, how I'm looking at the day. So 6,000 round number is the clear pivot. Now, the open interest or the gamma levels, and we can look at the open interest in a minute, has 60-15 right up in this area. There's a large open interest cluster. So if we go up, that becomes kind of a first magnet. And so I look at these open interest clusters and at the gamma levels here, and that's how I'm going to pick my targets. If we can get through this level, then the next level would be stall, would be head up toward here, but the assumption is that these are mostly a cluster of sold calls up here or mixed long and short. And I'm assuming the people that listen know something about gamma hedging, otherwise you wouldn't be watching a YouTube video by somebody that specializes in gamma. So market makers, if these are to the extent that these are sold calls, market makers hedge against the move. So as we go up, they would sell because their delta exposure increases. But then as we go down, they have to buy back those shorts. And then we get into this, potential chop range. So 60, 25, 30 on top, and then 15 if we manage to break above. If not, then 6,000 becomes the level. And then let's go to what happens if we break below. If we break below if we can't kind of hold this level, there's really not a lot of gamma, not a lot of, I'm getting this feedback here. I don't know if everyone else is getting it, this scratchy. There's not a lot of There's not a lot of sold puts, not a lot of put open interest at all to kind of support us. And so there's really nothing in the gamma world that's going to give us an edge. Not saying that there isn't going to be some market maker reaction. Of course, customers coming in, buying and selling is going to influence what's going to happen. But from a gamma point of view, gamma is broadly thin today anyway, and below us it's really thin. There's some clustering down here near 75, I think 80, 75, and we'll look at open interest in a minute to kind of fine tune things. But we have volume down here at 50, and we have an ominous, I don't remember how many contracts, 1,500 contracts or whatever it is, at 59.55. And since they entered the chain yesterday, because I'm a chain watcher, I keep watching where open interest is building up. And at the end of the day, I like to see where the volume was and what's in the chain the next day. I make note of that, but that's my thing. And so these 59.55s came in yesterday. And so should we get weakness down here, if these are customer long, dealer short, then this becomes a magnet. And if we break below this kind of level here, plus it's a TA level, so traders, quote unquote, are gonna, maybe start wanting to short into this. That will just add to power to a move down this in this direction. I'm not saying that happens. I'm not saying it won't. If then, I try as best I can not to have a bias. I would like to encourage you to do that, to just think in terms of reaction zones, think in terms of probability, and to look at the market that way. And again, I'm assuming a lot of you, most of you are experienced traders to some degree. And so you realize that we could just, let's say hypothetically, go up here, retest this level, come back down, mess around near flat, and then something happens and suddenly end up down here at the end of the day. We could play the whole range. Again, not saying it will. I'm just saying that's kind of the if then of it. Okay, how do I determine OI? Okay, what I like to call caveman style. I look on the option chain, but bar charts. Let's go to bar charts. It's got a nice little. Whoops. Oh, what's wrong with this? There we go. It's got a nice little toy. And I'm pretty sure this is free. I have like the premium, which is like 20 bucks or something. And yeah, but you can look in your option chain, but this gets easier for me. So wait a minute, this doesn't look, this is not right. Okay. Well, this is why we don't like bar charts. This is open interest from yesterday. Might as well talk about this while we're here. Let me see if I refresh it, if it goes away. Okay. So they didn't refresh their open interest. This 49, 59, 45, 25. I guess I'll have to just maybe pull up an option chain. It might think or swim or my tasty. This 49, 45, 25 was part of a QIS, a quantitative investment strategy that basically is a premium seller. I've been tracking these guys for a few years. Um, they tend to sell 20 wide, put credit spreads, a few DTE. DTE seem to vary 3 to 5. The day of expiration or the day before when they got in trouble, like they did yesterday, they buy back and they recenter. So they closed this out yesterday and they recentered, and I mentioned it in my note. They recentered, they restruck rather for, okay, see that? You can't see them. They restruck at 59.30. You see that? You can't even see it here. They restruck at 59.30 and they don't even have it here. Okay, so much for using bar charts. But this so but the let me see something. We're just gonna go. How do I find the open interest? Somebody asked. Right here, open interest. So there's 4,000 open interest right here at 49.55. Now we don't know what's left in the chain because that's what's open. So if I bought them and you sold them and we didn't close them, it's going to show 4,000, but that might not be what's in the market maker's book. But whatever's in his book, it's a big number. And so we have these 65, 60, 55. We have this cluster of puts here Some of it's going to be magnetic, some of it's going to be supportive. We're not sure exactly what's left in the market maker's hand, but that's where I get these numbers from. Of course, we have the 5950 large number, which brings us back to here, where we get this 5950, where we get this put support level. Does that answer your question?
Think so.
Yeah. On the chain, is there a way with mentor Q I'm not using? Fabio could probably answer it better than me because I'll be, perfectly honest. Mentor Q's got a wealth of tools that I don't use. Got a lot of stuff. I'm old. I've been doing this for a long time, and I have the stuff that I use, like looking in the chain, caveman style, writing down or noting large trades, open interest, that kind of stuff, and just sort of intuitively trying to figure out what's going on.
Yeah, and I think
So,
if I
go
can
ahead.
take that, basically,
Yeah, please.
the best thing would be if you're looking at the chain to look at the option matrix. The option matrix is really simplifying the read of the chain. So here you have on the left-hand side all the exposures. You have the DTEs, so days to expiration. You have the total gamma for that specific expiration, total delta, so DEX. You have the percentage of gamma expiring at that expiration. So, for example, if we look at this February 21st, here I think I'm on, let me
Oh,
see,
you're on SPX.
I'm
You're
on NVIDIA.
on.
On NVIDIA. So on NVIDIA, we have 26% of gamma expiring on February 21st, and we have 16% of open interest expiring on February 21st. And then also, if we want to look at the biggest delta, we see that is at the June 20 expiration right here. And then what's also very interesting is the change in gamma and change in delta versus the previous day. So we've seen a 52.64 million increase in negative gamma versus the previous day. And also you have the different levels for the expiration. So for example, if you're looking at, let's say, February 21st, you see that the core resistance for that expiration is 125 and the put support is 110 and the high vol level is 123. And then also you have the expected move, which is very similar to the 1 day expected move, but the expected move for that expiration. So by February 21st, NVIDIA price is expected to move 19 points above and below. This is based on our models and the options data provide back in the model on the back end.
Okay. And another way to look at open interest, if you turn it back to me,
Yeah.
is on the website, there's volume and open interest for the charts. And so you can kind of see where the open interest and the volume is at the different levels. So you can kind of see where the clusters are. I know Fabio and the development team are always working on stuff, and I saw some previews of different ways they're going to be visualizing it, but they've got like a development queue about 1,000,000 miles long, and so they'll be rolling out new features all the time. And another way to visualize something like that, and while we're here, you could see. Okay, this was okay. So for today, you can see we have that big cluster of calls up there that I mentioned in my notes, and we have these big clusters of puts down here, likely sold. So could think of this as supportive. But other than that, there's not a lot. So you can see why we say gamma is thin. There's really just not a lot. There's not a big edge today based on gamma. However, there is an edge. There is a significant amount of stuff, technical term, for tomorrow. And that I know because I watched it happen that this stuff down here are sold puts. I'm not sure what's going on up here. And so as now one thing we do know, so gamma is time sensitive and spot dependent. Okay, so as time passes, I mean, as spot moves, let me get back to a chart. As spot moves, the gamma, you know, if we're up here, this gamma is going to matter. If we're down here at the end of the day, this gamma doesn't mean anything because delta changes. And however, what we do know, no matter what, time passes. And so as these longer short options decay, it becomes a prescription for what the dealers have to do. So these levels become increasingly important at the end of the day when we're near them for potential pins. If people like to play pins, butterflies at the end of the day, I'll, kind of play around with that. So if we're somewhere, I guess hypothetically, near here at the end of the day, I might look for a pin somewhere in here and do a butterfly 10 wide or something. If I get a cheap fly over here to try and pick a pin. Okay. And so few other things I want to point out here that I mentioned. Okay, so unless you've been I'm assuming that everybody here is a trader to some extent, and you've probably heard of Palantir. And so Palantir had a blowout earnings reaction. I'm not here to pontificate if it's overvalued, undervalued, if it's a crazy move, if it's whatever it is. What we do know is that it was a bullish earnings reaction that we can clearly see. Now, here's something, this is kind of one of my things. We also know that this exceeded the expected move. I know because I looked in the chain and I knew what the expected move was yesterday. This exceeded the expected move. What tends to happen when we exceed the expected move or get real close to it is that market makers are forced to hedge. I believe, no one told me this is my thing, are forced to hedge in the direction of the move. They end up having to buy and chase, bullish spirits come in, and we kind of get this overshoot, and we see it on earnings all the time. Last quarter, I think it was, Snow was a classic example of that. Salesforce too. It happens on Meta sometimes. When they exceed the expected move, we get one of these deals, and then we tend to, once this is hedged out and all that, maybe the Friday, maybe this Friday, if not by next Friday, OPEX again, we tend to revert back. Tend to. Obviously, if people keep buying calls or whatever, then market makers have to keep chasing. But that said, as we go, as goes PLTR, I didn't run some of the software names, but I'm just going to take a stab at the fact that the assumption that, well, what do you know, Salesforce is up on the news. Let's take a peek at IGV. If you're not familiar with it, IGV is the software ETF, something that I just kind of look at often. Um, Now, for some ETFs, and this is one of them, gamma exposure is not very prescriptive because there's not hundreds of thousands of contracts there. The market makers can hedge it out without affecting the ETF too much. The ETF is going to be more driven by the delta exposure of the individual names, Salesforce, Microsoft, etc. Still, this gives us a nice little roadmap of where market participants are placing their bets. And as we can see, software is going up. That's the main thing I wanted to show you. I didn't want to get into this whole discussion of nuances of using some of the tools. And so that's obviously spilling over into Qs. But we have that dispersion within the Qs, dispersion, something goes up, something goes down, and we chop around in a range. It's software goes up, semis go down, medical stocks get mixed because Pfizer beat and Merck missed, and so the index doesn't move a lot. So let's look at NVIDIA.
And stop, Doc. Before we go to NVIDIA, maybe can you hear me?
Yeah, I can hear you.
Maybe we also want to look at the swing model that we had on Palantir. So,
Good idea. Excellent idea.
Yeah. So, for example, let's take the earnings were on the 3rd. Let's look at the model on the 28th, which was 5 days before the earnings. This is like our proprietary model, so it's based on a mix of we use machine learning techniques based on option data and a few other variables and factors. So here we have our 5 days swing model. So this was from last week, from January 28th. We have a lower band of 71.45 and a risk trigger of 89.01. So we do have all training around the model, but essentially what the model is trying to not only predict is the lower level where the price should be in 5 days in the future. So as you can see, this was 71, obviously way below what Palantir is now, which is 100. And then obviously the risk trigger was broken, but the risk trigger is really a volatility level that can fuel like a potential move. And also we have some back testing results here. So whenever we had the lower band, 5 days in the future, the price was always above the lower band on 87% of the cases on 31 days out of 34. So yesterday with Dan, we showed some ways of using this data. We're going to keep going that. We're going to do some interesting back testing for next week. So stay tuned. But this was a good example on how to use the 5-day swing model.
Full disclosure, I sold 70 puts into earnings and was willing to own it. And the lower band was just part of the reason why I picked the 70s.
Nice. That's good.
Just FYI. I also have a lot of 100, 105 call spreads. That's long, but that's neither here nor there. I got lucky on that one. I don't always get so lucky,
Makes sense.
Yeah, I don't always get so lucky, believe me.
I'll pass it back to you, Doc.
Okay. So NVIDIA, as you can see, that's stuck in the mud. And as Fabio just showed you before, I'm not going to go back, do a detailed analysis of NVIDIA. You saw that's kind of buried in puts. And we have that 123 was kind of like the HVL area on the whole chain. So, it's got to get, here it is, 123. So it's kind of got to get at least over 120, the round number, because us humans like round numbers. To kind of get going, we've got these puts over here. It's buried in puts. If I were doing an analysis myself, I'm just going to show you like a quick little something. I would look over here on the dashboard, and I would want to see, and I didn't like do this before. This is, now skew for NVIDIA. This must be earnings over here. looking at the term structure. This must be earnings over here. So obviously there's going to be a lot of volatility there. Going to look at the 1 month skew. And interestingly enough, skews seem to have come down, even though puts were bid and gamma come down. So there might be some call interest coming in. See here when skew came down. So skew is difference between the 25 delta put and call, or the 25 delta risk reversal. That's kind of an industry standard. Some people use 20, some people use at the money risk reversal. There's lots of different ways to do it, depending what you're trying to calculate or what your strategies are, fancy algo, hedge fund stuff. That's just kind of interesting to me. So even though it's bearish, I guess put a little asterisk in my mind, and we see it managed to put in this little green candle. But with China news, etc., it's just having a hard time. Okay. If I'll just run through everything really quickly, and then we'll go, because I kind of took a little longer than I had anticipated on the other stuff. I'm not a presenter that's going to give you a very structured presentation. That's just kind of who I am, and my trading style reflects that. I believe that one's trading style should reflect one's personality, and my personality isn't very rigid, so I don't have very rigid trading structures other than my if then that I have there, and I kind of keep my eye on that and on the manual action levels. Anyway, so applied materials, semis, kind of stuck in the mud. AMD has earnings today after the close. So, whoops. Yeah, the software wants to pull to the highest line. That's why that happened. And so this is clearly buried in puts. And I know if you look at the chain, you'll see puts at like 160 out into April or wherever it is, March, from when the stock was all the way up there a year, whatever it was, a year ago, people bought puts there. So it's kind of buried. But should this have good earnings and local call buying come in around here, this thing could reverse itself, and of course, good earnings can spill over into NVDA. The whole hardware narrative gets reignited, and the semis can take over leadership or not. NVIDIA, AMD could say, business ain't good. And then the talking head commentators can come up with a story why NVIDIA is good or isn't good. Amazon has been getting good press and has been having bullish action, also been having bullish options flow. I've been noticing, like I noticed in January, a lot of January calls closed and went in and rolled up in the quarterlies into March and even into the next year, January. So the bulls are sticking with Amazon. I like to go through the Google had some China news. China's messing with Google, but the market doesn't seem to be terribly impressed by that. Let's take a peek at SMH. I've got an SMH trade on that's kind of hurting, and at least it's not going down. We'll take that as a win. And I think that that's just kind of on hold until we find out what's going on. Till AMD maybe shifts the narrative a little bit. PLT. Its 88 level's been important. There was unusual call activity at 88 a while back. Some of us in the Discord noticed it. I think there were March 88 calls that were bought when we were like down here somewhere, a while back. I think it might have been, like a month ago or something. And I've long entered and exited. I assume other people do, but 80 have to. 88, 80, 88 is kind of a key level. Um, and now the long bond, and I'm not a macro bro, the long bond is getting somewhat of a safety bid versus an interest rate inflation bid. So there's that cross current, and Tim, our macro bro, could tell you a lot more about that than I can. Tesla got beat up yesterday, but of course, it's kind of bouncing back. And one last thing, I'll look at VIX and then we'll call it a day. Okay. Now, VIX 18 is an important over under pivot. And I'm going to show you why I think so. We're going to get back to this in a minute. However, the VIX 9-day is 19. So the VIX 9-day is above the VIX, the regular VIX, which is roughly 30 days, we'll call it. Not exactly, but close enough. So what that's telling us is people are anticipating volatility or nervous, quote unquote, shorter term. And I mean, 18 is still a high VIX, but not as nervous out in time. Okay, so that's called backwardation. VVIX, while we're at it, the demand for VIX calls is kind of spiky. And of course, we had spikes yesterday when everybody got nervous. And so these numbers for VIX, Gus, in your day trading, in my day trading, I'm going to be watching 19. I'm going to have the VIX. I have the VIX 9-day on one of my dashboards, and the VIX on one of my dashboards, on the same dashboard, on my volatility dashboard, and I'm watching this stuff. Now we're going to go over here. Now this open interest hasn't changed, so I'm gonna give that, hasn't changed a lot. I'm gonna give them a pass on this. And we're gonna go to the open interest. We're gonna order it by strike. And we're gonna go to mentor Q. Okay, so we see VIX 18 calls, 181,000 calls. That's a big over under inflection point. These are long calls. I don't know it, but I know it. Nobody is selling VIX calls, or unless it's part of a different strategy where they're long something and long one, short two, whatever it is. So 18, 19, 20, these are important levels. As VIX goes up, market makers have to start buying VX futures, which increases volatility, which spills over into the SPX chain. And you see this stuff up here, the 20s and the 21s and the 23s. As VIX went up overnight on Sunday night, I believe, I don't have any proof, market makers had to hedge this out, and in the illiquid Sunday night market had to buy the VX futures that caused some of the damage. I was somewhat bullish going into yesterday. Had my face shaken a little bit, but turned out it was okay. And similarly on the put side, let's just sort by strike. We have 149,000 puts. So clearly that's an inflection point. Now let's go to VIX. And I'm just kind of like freestyling here, as I'm looking at things in the morning or in the evening or whenever I look at things. These are the kinds of things that one can look at. Whoop, that's not, I didn't want to be there. Hold on. And all those tools are available here. And like I said, you can look at option exchange, bar charts. A lot of people use whatever unusual options activity services they like. Bar charts has unusual option activity. I look at that with a grain of salt because we don't really know if these large trades are bought or sold because they generally go in as a package. Somebody who wants to buy or sell 5,000 contracts, that's negotiated. And so if it's above or below ask, it's probably what they say, but doesn't have to be. If it's part of a combo, if it's part of a calendar or something, it's a negotiated price and the number is somewhat arbitrary. So what did I want to? I want to just look at the VIX here, and so you can see the clear transition zone in VIX, and that's another kind of concept way to look at it. Some people look at it as a neutral or transition, and so you see the clear zone here at 18. So that's something else I'm going to be looking at. I think I'm going to cut it off now. If there's any questions.
Yeah, I think we're good, Doc. Thank you. Thank you so much.
Okay, my
As
pleasure.
always, thank you for your review. As always, Doc is available within our community. We're also going to be back on Thursday. So Tuesday and Thursday are going to be streamed live on our YouTube channel and X. We also have our Futures Morning Club scheduled for the 6th. We have also like a really nice event on Thursday about quant trading strategies, and we're going to post the schedule for next week. So we're going to be back live with the team, with our macro update on Monday, and with Dan for some earnings options plays on Monday as well. So stay tuned for that. For those who want to join us, check out our product and our platform, mentorq.com. We're going to have a massive release at the end of February. So stay tuned because what you saw today is just the beginning. A lot of new things are coming. So very excited about that. So stay tuned, guys, and see you soon on our next live. Thank you, Doc.
You're welcome.